Good afternoon. I'm Don Manzullo. I'm the president and CEO of Korea Economic Institute of America, and welcome you here this afternoon for what should be a very interesting exchange on issues involving the future of free trade in East Asia, from KORUS to China to TPP, with a question mark, meaning going even beyond TPP. So this is going to be a very interesting forum, and we welcome you here this afternoon. It's my opportunity to introduce to you the ambassador, and then Dr. Lee from the Korea Institute for International Economic Policy. When they finish, we'll leave hopefully maybe 10 minutes for questions, and then Troy will be bringing up the first panel. My opportunity to meet the ambassador goes back to about a year before he became the ambassador. And I was in Seoul I believe it was in June of 2012. I had a very interesting conversation. Little did I realize that he would become the U.S. ambassador to Korea. Little did he realize then that he would become the Korean ambassador to the United States. And when we found out it was he, I was so excited because I had spent a good hour with him and learned a lot about the tremendous background, the deep background that he has in international trade. He will be our first speaker. Then he'll be followed by Dr. Houng Lee. Dr. Lee is the president of the Korea Institute for International Economic Policy. Long background in international trade. He is also Korea's Sherpa to the G20. So he wears many hats, tremendous background in trade and international diplomacy. Ambassador Lee, the podium is yours.
Well, thank you so much. Can you hear me well? Right. It's such a warm day, and I should congratulate you and thank you for braving the heat and braving the humidity in coming to this get-together. So thank you so much. And in fact, there are so many people I should be thanking. Honorable Manzullo, as well as all of my colleagues here at the KIEP for organizing this very timely meeting. And I should be thanking Dr. Il-hyung for coming all the way from Korea to here. And I just look at the panelists today, and I have to tell you, and then you will agree with me, this in fact is not a group of panelists. They are top-notch panelists we can get hold of here in Washington, D.C. So thank you so much. And having said that, this is something we were chatting just before coming in with some of the panelists. This is something we were chatting, which is the timing of this seminar. I've been ambassador in this town for about 2 years now. And then the issue of trade and issue of trade policy has been never higher. The interest in issue of trade and issue of trade policy has been never higher in this town for the past 2 years. Now we all understand what is happening in the Congress in order to pass or to deliberate TPA. And then, of course, we hear all the things about White House, how hard White House is deploying all the resources it has in order to have it happen. And then all these academics and all the journalists, they in fact are continuing to educate us with the wonderful world of international trade. So as I observe all of these developments and I listen to all those discussions, then I just ask myself this question, which is, well, I'm Korean ambassador in Washington, D.C. And between Korea and United States, then of course we have something called KORUS FTA, Korea-US FTA. Does KORUS, can it make any contribution to the ongoing deliberations, to the ongoing discussions here in this town? What is your answer? My answer is yes, resounding yes. And the reason why I say that is because, well, it's very simple. Because it is already 3 years that Korea-US FTA entered into force. And during those 3 years, it has been working very, very, very well. And I said very, 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 right? 3 times. Why? Because I just try to look at trade in goods. And trade in goods between Korea and United States, it is increasing very, very impressively. For example, when it comes to pharmaceuticals, it increased by more than 100%. When it comes to automobiles, here I should be very careful. Why? Because there is James coming from Ford, so I should be very careful. But for the past 3 years, the export of automobiles from the United States to Korea, it increased by 140%. And then if you look at some of the agricultural products, the other day I was coming to visit somewhere in California, an agricultural town, and then I was meeting with the members of the Chamber of Commerce. And then there was an exporter of orange. And he said, well, Mr. Ambassador, I'm so glad about Korea's FTA. Why? Because my orange being exported to Korea, it increased by 50% last year. And then there was another grower of almond. And he said, my export of almond to Korea, it increased by 70%. So wherever I go in this country, then I hear all those wonderful things. And then as I told you, my first very that goes for trade in goods, and it is increasing very, very impressively. Last year, your export to Korea, U.S. export to Korea, it increased by 9%. What is happening? Korea, in fact, is the 6th largest trading partner for the United States. We caught up after. We used to be 7th largest. And after Korea's FTA entered into force, we caught up with one country, and we became the 6th largest trading partner for the United States. Do you know which country used to be the 6th largest? Just ahead of Korea? It used to be UK. So we took the place of UK and became the 6th largest trading partner for Korea. Second vary goes to trade in services. And when it comes to trade in services, I don't have to remind you in the sense that United States, you are the most competitive provider of service in trade. So you wouldn't be surprised, but there is trade surplus in favor of the United States by $10 billion. And then it is increasing very impressively again. So that is my second vary. My third vary, that goes to investment. Investment from Korea into the United States, it used to be far smaller than investment from United States to Korea. But they changed it since sometime like 2005, 2006. So last year, Korean export to Korean investment in the United States, it was $3 billion larger than U.S. investment in Korea. So all these things are happening, and to a large extent, I think it is because of Korea-US FTA, which entered into force 3 years ago. So as Korean ambassador here in Washington, D.C., I'm very encouraged about all these developments, but at the same time, more importantly, I hope that Korea-US FTA could in fact serve as a kind of best case scenario in this ongoing deliberations and discussions in this town about trade and trade policy. And then what we are doing today, thanks to the arrangement by Honorable Manzullo and my colleagues at the KEI, as well as all these panelists, as I told you, top-notch panelists we can get here in Washington, D.C. I think it will be another good occasion where we can just spread the words about how well Korea-US FTA is working and will continue to work in the days to come. Thank you so much.
Okay, I have prepared a presentation because being an economist, I need to talk about numbers, and it's best to show charts rather than just talk. The issue that I'm going to cover all related to trade, but there are a couple of other things that I'd like to touch base on today, because as I was traveling around, I noticed that there have been a lot of misperception of what's actually going on in Korea. So I've prepared some issues that I'd like to clarify for the sake of communication between Korea and the United States, relating to external issues that Korea is facing at the moment, which are not easy to address. So let me talk about the rising current account surplus, which many people are talking about, including people in the United States. As you can see, the current account surplus largely attributed to the growing trade surplus in Korea. So The net services are still negative, but not large relative to the overall trade growth. We did a structural VAR and using the arrow decomposition, try to figure out what's actually contributing to the growing current account surplus. And I'm not going to bother you with all these technical details, but just to come to the bottom of this. Essentially, there are key factors like the slowing world trade, terms of trade, real effective exchange rate. This is domestic demand, DD, and other unidentified issues. But in particular, the last couple of years, we found the terms of trade and domestic demand to have been the major contributor to the growing current account surplus in Korea. So here I'm showing you the same chart, but just cut for 3 years for clarification. And as you can see, the large terms of trade. Here we are missing actually the other component because the sharp drop in oil prices also contributing to growing current account surplus. But domestic demand has also contributed significantly. The exchange rate in terms of contribution has been very small, except for 1 quarter there. And another quarter earlier on that I'll come back to later. Now, then we asked this question as to why domestic demand in Korea was actually slowing. And the answer is that we have very poor growth in consumption, particularly private consumption. Now, private consumption has now fallen below 50%. On top of that, you have to add government consumption, which is about 15%. Then, of course, investment, which still accounts for about 30%, which relative to our history is not high, and it's not actually holding up well. So given the sluggish growth in consumption and investment, that's both 95% of domestic demand, and that's slowing and has not actually been growing very rapidly. Here I show you the nominal growth in consumption versus the inflation rate, and as you can see, consumption in real terms has actually been almost flat for the last 10 years. And this is a fact that not many people outside Korea knows. Oops. Don't be discouraged about these charts because I'm not going to explain all this. But the point that I try to make here is this is usual the macro balance approach that we used to use at the IMF to assess external balance. And the point that I'm trying to make here is that the situation that we face in Korea is very difficult to solve through macroeconomic policy combinations. And because neither the macroeconomic policies, the exchange rate, interest rates are actually having a notable impact on domestic demand, and the fiscal policy has only a very short-term impact and reverts back to very slow growth. Then we did a VAR decomposition and looked at the impulse response function. And what we found was actually indeed after the crisis meaning the 2008 global financial crisis, you can see that a 1% standard deviation of Korea's short-term interest rate has hardly any impact on the domestic demand. This can be explained in many different ways, but I've just prepared a couple. First one is on consumption. It seems that interest rates is not impacting consumption much because it seems to affect private sector's balance sheets. Interest rate seems to affect private sector's balance sheet both on the asset and liability side equally or similarly to the extent that the overall growth in consumption is not really picking up. Even though we have a very large, still notable output gap, and inflation is very declining on the declining trend. And recent moves on the interest rate has not really had any impact. And investment are, as you know, if the policy rate goes down, which is very short term, the maturity structure on the long term is influenced through term premium. But long-term interest rate, which essentially is key for investment pickup, is not affected by Korea's short-term policy rate, but by U.S. long-term interest rates. So this is a problem that we face at the moment in Korea. So investment follows U.S. monetary policy rather than Korea's monetary policy. And this is shown here clearly. The two things aligning. This one is Korea's long-term interest rate. This is U.S. long-term interest rate measured at 10-year T-bond. And you can see that the correlation has actually gone up to 80.8, whereas before it was about half. And even the country risk premium seems to be collapsing. And this is just a general trend in tandem with the global mispricing of risk generally. Short-term correlation with the point that I mentioned, the short-term interest rate in Korea, 3 months CD, which has decent transmission working from the policy rate, and the 10-year Korea interest rate correlation is almost zero. So there is no pass-through on in investment. Then what about the exchange rate? Well, we look at the exchange rate again. Exchange rate has only a very minor impact, but if you look at this at the 90% confidence interval, essentially we have to reject this null hypothesis, which essentially means exchange rate does not have any impact on the current account surplus. But then that said, if we look at by region, it's slightly different depending on who our trading partners is. For example, in the United States, where most of our trade is on the final product goods, it does have some impact at the beginning and sort of dies down very quickly. Whereas in Japan, we have a different type of relations with Japan. We have large deficit vis-a-vis Japan because we import a lot of intermediate goods as well as capital goods from Japan. Whereas to the US, we export most of the final goods. There, the dynamics, as you can see, is different because the initial impact on the exchange rate depreciation is actually a drop in the trade deficit, essentially because we import a lot of stuff. But then as that filters through the production, then it has slight positive impact. But again, at 90% confidence interval, we have to reject both of these tests. Another reason the exchange rate doesn't really have much impact on the current account surplus is because you can see here that Korea, this is Korea, has the largest component in intermediate products, import and exports as part of the global value chain. This component essentially is a component that we, I forgot which one is which are here, used in third countries exports. So these are the intermediate products that we actually export, and then the third countries who import them use them as part of their input for exports. And then this is input used in exports, meaning our aggregate exports, we use this much of intermediate products that's produced outside Korea. And it's largest. So if you have this mix of intermediate goods coming in and out, Korea being the most fully integrated into the global value chain, then the exchange rate has obviously very little meaning and impact. And then we looked at what is actually affecting the exchange rate in Korea. We did some analysis with a log difference in key variables, reserves for one, and other control variables, and found that reserve is significant, and not in terms of trade, but oil price seems to be very significant in terms of impacting the exchange rate in Korea for obvious reason, and with the right signs. So what that means is that if the reserves goes up for whatever reason, obviously because intervention plus other stuff, then the exchange rate appreciates less. If the oil prices goes up, the exchange rate depreciates. So that's the relationship. But then here again, we divided the relationship into two periods. One is the pre-crisis and the post-crisis. And the gaps here between this line and the shaded line are the extent to which reserve accumulation has actually affected the exchange rate determination. So if you see these large gaps here, this means the exchange rate could have appreciated by this amount had intervention not taken place. So this period overall, you can see that the intervention or the accumulation of reserve has actually prevented the exchange rate to appreciate relative to what the market would have determined. But on the other hand, if you look at the post-crisis period, we don't have that space anymore. So already for the last 5 years or so, the exchange rate de facto has been market determined, because the gaps, except for, let's say, 1 or 2 occasions, is essentially sort of market determined exchange rate. And this illustrates in a graphical way the point that I was just making. In the last 3 years, I looked into the periods through the arrow decomposition that I showed at the beginning, during which period the exchange rate actually had some impact on the current account surplus. And I identified 2 periods, and that's here, this period, and then this period. And during this period, where the current account surplus actually surged, no other movements in the capital accounts, you can see that the reserve accumulation was flat or even declined slightly. So there was no intervention. But the exchange rate depreciated because the US dollar in nominal terms, actually, in nominal effective terms, depreciated. And which essentially means that because of the capital account movements, the US dollar depreciated and the Korean won also depreciated at the same time, influencing the current account surplus. So these are sort of some underlying factors or analysis behind the growing current account surplus. And the bottom line is we don't know what to do about this, at least from the macroeconomic policy perspective. So if any of you have an answer, please let me know. Then there are a few other sort of related global economic issues that Korea is facing at the moment, partly related to trade and partly not. And the first point is the huge global liquidity stock. And this is particularly an issue for Korea, and I'll explain to you why. In particular, if you look at not only this, this is the BI is reporting bank's balance sheet, which is much easier to control and to monitor. We have this growing non-bank to non-bank cross-border liabilities, which continues to grow, and this is much more difficult to monitor. In addition to this, of course, we have now increasing financial products that are linked through options with financial price developments in advanced economies. So, for example, we have debt-linked notes in Korea, products that are linked a lot to the U.S. stock market, for example. And you know that there is a general view that the U.S. stock market is overvalued. So if normalization leads to sort of a correction in the stock market in the United States without actually having any notable cross-border liabilities, a large part, not large, but some part of the Korean financial market will be affected. So, but even abstracting from that, you can see that the growing non-bank to non-bank transactions are still continuing to grow now. So why is this a problem? This is a problem because Korea is one of the 6 countries that's part of advanced economies, is identified by Ito Chin's Financial Openness Index as having an open current account, capital account, but doesn't have a convertible currency. So that's a problem, because being part of the OECD means it's relatively large, it's relatively advanced, so its financial market is open, but it doesn't have a current account surplus, so capital account convertibility, currency convertibility. In other words, the won is not internationalized at all. So we have to rely 100% on reserves and the exchange rate, of course, if there's a shock. And given the magnitude of the amount of capital flows or the stock changes that I've just shown you, once there's a shift in sentiment, you essentially had it. Even during the global financial crisis, as you know, the IMF, if I remember correctly, we were saying that the Korea reserves was too high relative to its fundamentals. And we found out painfully for the second time in the last 15 years or so that it was not adequate enough, and we had to resort to the Fed for assistance. And here it shows part of the story why we have this global liquidity problem. And this is actually a chart prepared by BIS, which I essentially copied and pasted. You can see the advanced economies balance sheets growing. This was 2.5 in 2000. It's now 10.5 or almost 11. So $8.5 trillion increase in central bank balance sheets. In emerging economies balance sheet increased by 7.5 trillion. So why is this relevant? Why is this comparison relevant? Because for a country with a currency that is convertible, bank balance sheet, central bank balance sheet, is equivalent to central bank balance sheet in emerging economies that do not have convertible currency through the FX market. What that means is essentially, if you have a convertible currency and your economy is big, you can actually expand liquidity without any concern that you might actually face an FX constraint. If you do not have a convertible currency, then essentially the scope of your expansion is limited to how much reserves you hold. And therefore, what actually has happened is that as countries with convertible currencies increase the central bank balance sheet, emerging economies balance sheet, central bank balance sheet also increased to a lesser extent, but with a similar sort of intent. And here you can see the FX of reserves increased by 6 trillion. So 7.5 trillion expansion in central bank balance sheet, of which 6 was from intervention in the FX market. And of course, depending on how much sterilization they undertook, that has an impact on domestic liquidity in emerging economies. So essentially, you can see the 7.5 increase in emerging economies central bank balance sheet expansion is not really large if you consider that 8.5 trillion increase in advanced economies balance sheet. Korea, on the other hand, is average in terms of this increase because the increase is 2.5 in reserve accumulation, which is about similar. And also in percent of GDP, it's holding at around 25% of GDP, which is similar or slightly below the average emerging economies. So the point that I'm trying to make here is that while I've shown that intervention has actually prevented the won from further appreciation, there was a reason for that because during the 2000s period, Korea needed to increase international reserves in tandem with what was actually going on in the rest of the world. And this is another problem that we face in Korea, and that's aging. And this is a calculation that I actually, most of this calculation I did myself. So if there's any mistake, it's my fault and nobody else's. I did this calculation on the basis of very simple assumptions, permanent income hypothesis, and optimizing over 80 years and so on. And what I essentially generate is that the Korea at the moment should have current account surplus that's close to about 5% of GDP, which is what we have at the moment. US should have had a current account surplus in the past decade, and now start generating a deficit from now on. But US have been reversed, so that's a problem. And this is just simply looking from a population dynamics point of view. But even though on surface this looks okay for Korea, if you look at the details, we have a problem also here. Because of the 5% surplus that we generate in the current account, most of that comes from non-households. And households only 5% of the total saving. And that's a problem. Because essentially you need to pay the households, the pension has to be paid later on, and that has to come from either the government coffers or household savings. But household saving is extremely low at the moment. So that's another problem that we face. And to the extent that if you look at the very complex dynamics going on in terms of the global population, and the fact that we actually have not fully operational international monetary system, and I'm not going to go into details as to why, this creates a problem in terms of how do we actually define the right amount of global imbalance? Because S minus I, as you know, any imbalance is not, it's wrong to say that any imbalance is bad, right? Because we need imbalance. For example, we have imbalance with Japan, because we import raw materials, and we have surplus with China because we export more. So imbalance should be there, but the question is, okay, how much is the right amount? And that's something that we have to figure out, particularly given that the international monetary system is not really giving us a market-determined amount. And just in a nutshell, advanced economist monetary policy is equivalent to emerging economies exchange rate policy if the EM country does not have a convertible currency. And this is just economic theory. So then I looked at the exchange rate in general, trying to figure out, whether Korea's exchange rate is okay relative to other countries' development. And what you see here is there are essentially three different types of groups of countries, and this is a very simple sort of analysis grouping. Look at currencies against the dollar. And you can see that these are countries whose currencies actually strengthened per US dollar over the last couple of decades. And it's China slightly. And this is in nominal terms, so it doesn't reflect the inflation differential, productivity differentials, nor the relative effective exchange rate, okay? So, but anyway, so China, Canada, Australia, Singapore, Switzerland, Thailand have relatively exchange rates appreciating against the dollar. And then currencies that depreciated against the dollar, Indonesia, Mexico, Russia, and India. And then we have the rest. Most of currencies remain broadly stable. I mean, it's volatile, but relatively stable vis-a-vis the dollar. And that's Japan, Malaysia, and also Korea, and as well as Euro. Here you look at this. This is the nominal and real effective exchange rate of the US. You can see during the first half of this time period, the US dollar depreciated in real effective terms. Korean won appreciated during this period because it's the other way around. Then at the crisis, Korean won because the economy received a big shock, depreciated a lot, and then started appreciating again. Whereas the dollar remained fairly stable and then only recently has started to strengthen. It's largely probably coming from the euro. So now let me turn to Chorus FTA, which the ambassador has already elaborated. So I'll show you a few supplementary data only. Just to have the right perspective, what we are talking about. Share of imports from US and Korea to each other's country. US import to Korea is only 3% of Korea's total GDP, Korea's GDP. Whereas Korea's export to the US on average is less than 0.4% of US GDP. So you hardly notice it in a sense, even though it's growing in terms of the scale, because the US economy is simply so large that even though Korea's export to the US is growing, you hardly notice it. So let's have that the right perspective first. The second is FDI to selected Asian economies from the United States. This is Australia and Singapore. And this is Japan. And the rest is relatively small. Why am I showing you this chart? I'm showing you this chart because there is a huge scope still left for enhanced cooperation between Korea and the United States. And Chorus is just the beginning. And I think just given this scope, even if in the coming near future, if the US only slightly switches its investment strategy, it can very rapidly increase investment to Korea because the relative size is so different. And exports to United States and exports to Korea from each country, it's very skewed. Essentially here, machinery and transport equipment, and the rest is all here. The same for exports to Korea by US. Again, a huge scope for these products to start increasing. We should also try to diversify. We started with these, it's fine, but I think there's huge scope to expand. US Chorus in terms of merchandise trade. We started off with 2.6% as share. Now it's 3. It's growing despite the slowing exports. US 8.5, 8.6, meaning imports from the US. Import has been growing actually declining in Korea, but still the share from the US is increasing. So, and it's only been 3 years, and it's very early, too early actually to make any quantitative assessment, but you can already see the impact starting to have a notable impact on the data. Utilization ratio. Utilization ratio of exports in Korea, only 44%. It's a huge scope for further utilization. Imports, 61%, so slightly high, not slightly, somewhat higher than exports. So we are making more use of the cross FTA for our imports from the United States than we are for our exports to the United States. Very notable progress in agricultural products. Here, total, and this is average base because it's relatively volatile. You can see a 35% increase in agricultural product exports from the US to Korea. Largest component contribution is actually coming from livestock, 123% increase, and this is the charts. In services, here you can see Korea benefited from transportation, US in intellectual property rights. And the slight drop in business services is because the US started establishing legal consulting offices in Korea directly. So that's being produced in Korea in-house. I'm not going to go into details, but let me just make this point that the US FTA and our institution is actually responsible for making all the preliminary assessment as well as the post-assessment of all our FTAs. I can assure you that Korea's FTA with US is the most extensive and the highest level of FTA that Korea has engaged in. And particularly, it's not only limited to the trade areas and reduction in tariffs, which was more the historic traditional ones, but this is a sort of a new type of an FTA that's probably to come in the future. And thus, our assessment on Korea's FTA is that we have essentially laid the basis for enhanced economic cooperation in the next decades to come, particularly in services and also in investment. And as you can see here, investment is now starting to expand the actual agreement into implementation. So we should wait at least another couple of years to see the full impact of services, leave alone the trade side, even though we have already seen a lot of beef being consumed in Korea. And finally, again, I'm not going to go through all this list, but these are some of the key legal laws that we are passing, we have passed, and we are still to pass after the Chorus FTA. So this is still in the making, but I'm very hopeful, given the scope of the FTA and the high standards that we have agreed, that the FTA, Chorus FTA, probably have the highest impact, the strongest impact that Korea has in terms of bilateral as well as in multilateral regional FTA that we have ever had. Okay, thank you.
The ambassador, unfortunately, has to leave a little bit early, so Dr. Lee, you're the one that's going to have to answer all the questions. But first of all, I've been a beef producer for years, and I want to thank the Koreans for eating my beef. Thank you very much. Any questions for Dr. Lee? Well, who's got the second question? Okay. Oh, here we are. Doctor, do you want to come up, please? And can we get the mic over here? No, here. Come here.
Thanks very much. It's Dana Marshall with the Transnational Strategy Group. I was actually hoping to ask this particular question of the ambassador, but perhaps Dr. Lee can
I can pass the question on to him.
answer it in a somewhat different way. Thank you very much for that very detailed presentation. Hopefully those charts, which are, of course, illegible for any of us here, they are available on your website, because it is good data. I'd like to be able to use it if that's possible. But the question is this. There's been a lot of discussion over these last several months, of course, in the debate in this country about TPA and all the rest, about how if we don't move forward on the TPA, then, quote, China gets to make the rules instead of the U.S. In the context of, let's say, the data that you've been showing and the RCEP negotiations between, and of course, the China-Korea FTA, I wonder if you could explain a little bit more concretely, what does that mean? What leverage might the U.S. have in that particular area about, quote, setting the rules in the cross-Pacific with TPP that would not happen if TPP does not happen? In your mind, when you hear that argument, what comes to your mind on this? It'd be interesting to get a perspective from a Korean, who's obviously very focused on this, about the economic implications of that foreign policy argument.
Okay. I'll pass on the question to the ambassador, but I'll also give you my take. Okay. The way I look at this is as follows. If you look at Chinese economy, the Chinese economy is now also facing its own problems. The way going forward and maintaining decent economic growth in China is actually starting to make gains in efficiencies. And that requires essentially more transparent rules and market regulations. And the Chinese knows about this, and that's why they're also engaged in the anti-corruption drive and so on. For Korea, we also have a very similar economic problem on hands, because essentially, as I mentioned to you, we are starting to get benefit from integrating into the rest of the world through global value chains. But it's only the large and the able, efficient SMEs that actually take advantage of this. So our investment abroad is much larger than inward investment, and thus we have a huge unemployment problem in Korea, similar also in the United States. The only way we can address this is essentially two ways. One is make SMEs much more productive, and also have a much greater transparency and global standards in all market regulations that we have, so that foreign investment actually, if companies may find it much easier to invest in Korea. From our institution's point of view, which we analyze the impact on TPP and so on, we found that the impact from tariff reduction on tariff reduction by joining TPP and the cumulative rule of origin and the addressing the global ball effect and all this is notable, but it's not really a make or break issue. For me, the main gain, the key gains from joining TPP is actually adopting the rules. It's a mega FTA. It's adopting, essentially introducing the rules into Korea. That's international standards, and through which we can actually also address some vested interest groups' resistance to changes in Korea. So given that there is a huge need, not only in Korea, but also in China and also in other EMs, as they actually move up into higher income standards, there's increasing greater demand for efficiency gains. And the only way you can actually make that happen is to have very efficient rules, transparent rules, and international rules. So I don't think it's whether TPP is passed in the US, which I'm not arguing for or against at all, but and also whether RCEP goes through or not. One thing that is clear is the direction. And the direction in Asia, not only in Asia, but I think globally, is that the standards that one is trying to hope to gain in the TPP is the standard that all countries will be seeking for, be it within TPP or not. So that would be my answer to your question.
Yeah, Mark Tokola from KEI. If domestic consumption rates are low and savings rates are low, investment rates are low, what are people doing with their money in Korea?
Sorry?
What are people doing with their money in Korea if consumption and saving investment are all low? Where is the money going? And is there a government policy designed to increase domestic consumption?
Yes. Well, this is, by the way, I quit my job as G20 Sherpa last month, so I'm no longer the G20, and I feel much freer to talk about these issues. So whatever I say, it's not official. It's the question that you posed is actually a question that we have been addressing at the G20 level, because at least 18 countries of the G20 face exactly the same challenge. So it's not a Korea-specific issue, but it's a global issue, and it will take me a long time to go through all this logic. But essentially, the bottom line is, one, you have globalization, you have innovation, particularly labor-saving innovation. You have partial labor mobility. You have full capital mobility. And if you put that all together, and you have the safe havens where you can actually expand the global value chain, but using the transfer pricing, you can actually store your profit wherever you pay least taxes. So if you combine all this, you get the results that you desire, not desire. And Korea, at the G20 level, we've just addressed the BEFS problem. You tax wherever you generate income. That's one. And we're also trying to address cross-border antitrust, monopolistic competition issues. At the individual country level, I think they also need to strengthen competition laws and regulatory framework. They have to make more transparent. That's the point that I was trying to make early on. And all these things are being addressed actually under the Korea's 3-year economic plan that was announced last year.
Let's take one more question. Okay. Well, Dr. Lee, thank you very much for. I found that very interesting, a little bit hard at times to follow, but then again, as a package, it made sense.
Oh, okay.
It made sense. So thank you very much.
Okay,
Appreciate
thank you.
it. Thank you.